Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Tesla report for Friday, January 5th, 2024.
But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever.
Let's jump into the charts. We've got this weekly chart here that I show usually right in the opening segment here, and that is a 6-month channel top that we tested last week. It was an objective for a number of weeks, going back a couple of months ago. We tested it last week and have fallen away. 259.38 all week long, dropping next week. The daily chart has a similar structure, actually an identical structure at 256.97. We did about a week ago close above it for a moment, for a day, before the following day putting out a key reversal high and closing back below the daily structure, which underscores the importance of weekly settlements in relation to longer-term line studies. So, if we were to get a buy signal, and actually, let me rephrase that. Our next long-term buy signal on strength would be a settlement above 259.38, that formation by a 1% margin. This week's number is 261.97, a 1% violation of 259.38. And then I see a buy signal into the second quarter, through the second quarter, really the next 3 to 5 months, then likely to reach this 350.78 long-term channel top. But we are not there. We've come off of channel resistance and holding below channel resistance in terms of the big picture possibilities that you can prepare for. You can set yourself up for. There's obviously no certainties, but the 180.70 descending channel bottom remains in reach over the next 3 to 5 months. We've fallen faster than that in the last year. I mean, you can actually see that off that July high. We fell an equal amount in about 3, 4, 5 weeks. So I'm not expecting that now, but it is what's possible. And so we came off of that resistance. What I am anticipating and have been saying now for the last few weeks is that the low 220s remain a 3 to 5 week objective below the upper 250s. That long-term channel top that I just showed, and you can see here again on the daily chart at 256.97, 220.77 to 221.93 remains a 3 to 5 week objective. This allows the market to bottom out at 237.49 through next week, back into the upper 250s, then back off again into the low 220s. But there's no certainty, obviously, that will happen. In fact, we just might close today below 237.49. And what was a 3 to 5 week sell signal is then realized inside of 2 weeks of testing the upper 250s long-term resistance. So, bottom line, we closed today below 237.49. The 220.77 to 221.93 region becomes a realistic 3 to 5 day target. In other words, by the end of next week, where we can bottom out into February trade and round back up into the upper 250s, mid 250s again, within 2 to 3 weeks of testing the low 220s. We could fill this wedge out here all the way through February. No, I take that back. Every time I mention these things, I look at the chart, and you can see by early February, we're already pretty narrow, upper 230s to upper 240s. No, it's not going to take more than 3 or 4 weeks for us to violate one or the other, either a buy signal above 259.38, that long-term channel top in the weekly chart, or a sell signal below 220.77. And if I had to pick the likelier outcome, it would be a sell signal below 220.77. This only because of the longer-term scope of this channel top that we tested last week and have since fallen away from. I've been mentioning how the channel bottom that is presently at 180.70 should be considered attainable over the next 3 to 5 months, and then expected if we close over the next week or two, let's say, below 220.77. So in terms of whether or not we test the low 180s, upper 170s over the next month or two, the answer to that is pretty clear if we close anytime over the next week or two below the 220.77 rising two-thirds speed line. There's also a channel bottom here. This is a meaningful zone of support that can absorb selling at least on a weekly, if not monthly basis. So if you went short a week or so ago when we tested long-term resistance on that weekly chart that is now at 259.38, and you're holding out for the low 220s, just know that if we close today below 237.49, you should be able to take your profits, by the end of next week. Now on the way down today, if we break or perhaps open below 237.49, this 50% downside retracement I think is likely at 229.60. That could be it for the day. And if we close today once again below 237.49, by the end of next week, expect the 220.77 to 21.93 region where we can bottom out into February trade, and from there round back up within 2 to 3 weeks to long-term resistance, presently 256.97 to 259.38. And I don't see it happening today, but I will say it one more time, that if we close below 220.77, you should set yourself up for the 170s as an objective. And that could mean, reaching for 175 out of the money puts that don't expire for at least, this is probably a 3 to 5 week move for at least a couple of months. You may go 3-4 months out on that expiration. As we slip, just dropped my mic. As we slip into the low 220s, you can take profits. You might have bought some 220 or 225 out of the money puts. I was mentioning as much a week and a half, 2 weeks ago. You could take profits, liquidate those acquisitions, then reach for 255 out of the money calls that don't expire for at least a month. I don't see that being any more than a 2 to 3 week rally, but you want to go further out in time to avoid time decay. And so that is the play right now. And inversely, if we were to rally off this 237.49, I should keep emphasizing that this inside channel, as I've been saying all along, may well contain selling through next week. And from here, we can round back up to the 256.97 to 259.38 region by the end of next week. So 237.49 is our pivot point through next week, above which we can retrace back to long-term resistance in the mid to upper 250s, and below which we should continue south to mid-term support in the low 220s. And so if you, though, position yourself a week and a half, 2 weeks ago by, say, buying 220 or 225 out of the money puts, I'm not trying to shake you out of that acquisition by mentioning that 237.49 may well contain selling through next week. It's going to require a little more time, perhaps. But if we close today below 237.49, I don't think you have to wait very much longer before reaching your objective. Let's see, anything else to say? I do need to cover the upside just a bit in case we rally today, and we may. If we open at or above 237.49, there's lots of room for us to reclaim lost ground up to 247.40 within the day. I've rebumped that up to a session containment level because it is pulling away from the market, and I think it's realistic that it may well contain daily buying pressures. Holding above 237.49, 247.40 in reach where a daily high can be placed. We could fall off from here back to 237.49 on Monday, Tuesday. If we close today above 247.40, expect a Monday, Tuesday test of the 256.97 to 259.38 region. And by the end of next week, or at the end of next week, or over the next few weeks, if we close any week above the 259.38 formation by the required 1% margin, long-term buy signal into the second quarter, the 350s and climbing anticipated then by the end of Q2. But we're not there right now. What is possible is the upper 170s over the next 2 to 3 to 5 months, holding below 259.38. I'm going to leave it at that for Friday's Tesla. Please click like, share, subscribe, and check out wickedstocks.com for that 5-day free trial. I'll be back Sunday afternoon with Monday's Tesla, and you have a great weekend.